Is there an RSI trading strategy that actually works? In this video, I'm going to show you two examples and give you my experience of using the RSI. So on TradingView, I have the Bitcoin chart here. Come to indicators, type in RSI, and then we can put this on. If you don't have TradingView, it is free, so go ahead and use it. Tradingview.com, I'll link them below as well. From here, the RSI will appear down at the bottom, and I'm going to show you the settings right here and the inputs, so you can have the same thing. Just everything is as normal as the RSI comes. Now, the typical way to trade RSI, as we know, is that it's a relative strength index. So the relative strength of the price action. People will say that the 30 level here is oversold or weak price momentum, and 70 is strong price momentum. So usually you would hear, let's go ahead and buy weak momentum. And when the momentum gets up to the overbought level or the very strong level, we can sell that because it may reverse down. I don't think that works, and if we trade like that, we're going to chop ourselves to bits, and it won't be a successful trading strategy. Firstly, I'll show you what the RSI can't do. Once we know its limitations, we can actually use it to our advantage. As you can see here, this is very weak momentum, right? Where the RSI is very, very low, and clearly it's moving back to the upside. If that's moving back to the upside, most people would think we now are going to get some very decent price action. As momentum picks up and is bullish, that usually leads up to bullish prices, and you can see that did happen. However, you can see that RSI starts to top out around here. And of course, as RSI is weak and moves down, many people may think that that is a kind of weak momentum and we should sell this. Well, the price actually still moves upwards. And even though we got that weak momentum, price is moving up, and we had a huge rise in the price right here. So RSI failed us on that occasion. RSI is only a momentum indicator. So we actually have to go back to the drawing board and figure out what the trade is first, figure out our bias, figure out if we want to go long or short, if we're buying in a bull market or a bear market. Once we figure that out, then we can use the RSI to its advantage. Let's go through some trade examples then. I'm going to show you longer term investing first, getting trends and identifying them with RSI, and then going down to the lower time frame. So I'm on Bitcoin and Ethereum charts right here on TradingView. So what we're going to do is go to logarithmic, like this, logarithmic chart. We're going to go to draw. I'm going to draw some curves on. 3 curves in the middle, which one in the middle, one at the top, and one at the low end of the range. You can see that's happening with the price action here. Try to fit it as best you can. And we have essentially the long-term trend of the asset. And you can see it moves in bull markets and bear markets. You have expansions, you have contractions. So I've just drawn those on here. The lines are the halvings for Bitcoin. And for Ethereum, it's exactly the same thing without halvings. Bull markets, bear markets. RSI is going to really help us here. Now, what can we use the RSI for? So we're going to click the RSI on like this. RSI shows us momentum, right? If we are trying to accumulate or buy assets at lower prices to sell them at higher prices, we can use the RSI. There's 2 ways to do this. During a bear market, when prices are low, we can identify that on the RSI, and so we can accumulate the asset. The other thing is we can actually use the RSI to determine when momentum is changing, and that helps us time entries better. So this example down here shows us. This is the RSI of the long term, right? We're on the month chart here. Big bull markets and big bear markets. Of course, these areas are bear markets. And so long-term investors very clearly want to be invested when the price is relatively low in relation to a longer term trend. You can see that the longer term trend is very clear. The price is moving up over time as the asset gets adoption. However, these bear markets are now identifiable, right, with the RSI. When the RSI is low, 50 or something like that, or underneath, they are very weak periods for the price. Very clearly, we can identify the 3 previous bear markets. And if we were accumulating during these times, pretty good, right? We pick those bear markets as the price moves up. The other thing we can do over the long term is really identify when that price momentum is starting to change. So as you can see, the RSI moves through the moving average. Now these are long time frames, right? And so you're looking at over multiple months, but you can definitely see those areas where the price action is actually starting to move through the moving average. These are the areas where price momentum is changing and essentially is marking the end of the bear market, right? As you start to move up into positive price action. So the RSI, of course, can help us identify when momentum is changing. And that can help us time our entries better over the long term. right? Not just one trade, but multiple entries that we get to get decent average prices. You can definitely see that on the RSI right here. RSI only works to give us an idea of the price momentum in assets that we're trading, but we need to understand the long-term trend of that asset, whether we're in a bull market or a bear market, and also the price that we think we're going to get to in those market phases. RSI can't tell us that. It can only tell us momentum. For example, here, this is Ethereum now. You can see these two areas, these two bear markets. Great time to buy where price is relatively weak. But that presumes that this asset is in an uptrend and that out of this weakness, it will actually move again into a bull market and reverse and go into a very strong move again. That's not necessarily true for all assets. So you just can't buy weakness thinking, well, if I buy weakness, it will reverse and go to strength again, right? It won't work like that. We can also see that during these strong periods, these last for a very long time. So you have this strong momentum moving up and you've crossed the 70 mark, which most people would say, well, it's overbought now, so maybe it's going to reverse. But it doesn't reverse for a very long time. If you would have sold that, you would have sold at 600 and the price moved to 4,000, right? So we can actually wait for the price action to eventually turn into negativity. You can see that here, a lot longer, waiting for the RSI to move down, and then we're in another bear market. So you can see that price action, it's actually much longer term than we imagine. We can't just sell 70, buy 30, it doesn't work. Also an example of this, if we go over to another asset, so this is euro against the dollar, you know, the asset is just in a downtrend. So if it's in a downtrend, you don't want to be buying this type of weakness, right? Because what are you doing? You're buying the thing that's in a downtrend. So yeah, you bought weakness here. It did have a little rally, but eventually, you know, this thing's just weak and moving down. So why do you want to be in that? Why do you want to be in an asset that's weak? So it really matters what the asset is. We've identified a trend and then we can go from there. If you're in a downtrend, maybe you actually just want to be shorting the asset when it has its relative strength, right? So you want to know your bias and the asset and the longer term trend first, and then you can use RSI. If you're just looking to buy low and sell high like here, it's not going to work, but RSI can show us momentum as long as we know the fundamentals of what we're trading first. Now let's look at RSI on some lower time frames to try and get better entries for our trade. What is a trade? It is where you enter and then wait for the trend to play out. You're entering in the direction of the trend and waiting for that trend to play out. So that's a time horizon difference. Now we're going down into the lower time frame, time horizons. We're trying to identify that divergence, a drawdown within a trend. So the asset that I'm looking at is BTC and it's in an uptrend. So my bias is to go long when we get pullbacks. You can of course go long in bear markets or where the price is actually coming out of a bear market. That would be pretty decent. But what about in a bull market where we're getting trends to the upside? So I'm looking at the 1 month RSI here on the day chart on the Bitcoin price action. We can see that we had that bear market. We're clearly moving out of that. So we're in an uptrend for the RSI. Maybe we're in a bull market right now. Now what I want to do is go down to the lower time frame. So we're going to click time frame, 1 day, and we're actually going to see how this plays out. This is going to give us some information on the lower time frame movements. You can see how noisy this is. It's untradeable, but we can use the time frame differences to our advantage. So if we are in a bull market, the RSI is showing us we're coming out, and the price action and time is also showing that this is when Bitcoin usually has a bull market. We're in a bull market. So what you want to do in a bull market? Buy pullbacks towards the trend if we think we're going to move higher. So what we want to do is identify some information around that. Again, the RSI can't help us. We need some more information fundamentally. This is usually when Bitcoin enters a bull market. So the bias is we're in a bull market, so we can buy pullbacks or wait for very overbought conditions to actually sell if we're looking to sell out. We can also see that during bull markets, Bitcoin tends to pull back around 20 or 30%. So we're looking for those opportunities to get in if you're looking for better entries for your trades. Now we move to the RSI and we can actually see that as well. So we go down and we can see areas where the RSI is showing us that potentially these areas are where the price is pulling back towards a trend and is pretty weak. Now, if we're in a bull market and we think the bull market will last, let's say, for 2 years, you don't sell if you think the bull market can continue. As you can see here, this is not an area to sell because you're selling right here or you're selling right here. Prices continue to move higher because we're in a bull market. So the RSI can show us areas that help us get better entries for our overall trading strategy. We don't use it to buy and sell when it's low and high. We have our trading strategy first, then we can use the RSI to augment our strategy areas where we think we actually want to get in. So the RSI is helpful. It's not a panacea. It's just one indicator. If you trade crypto, check out the deposit bonus links to Bybit and the other exchanges I use down in the description. Some other helpful video guides will be down there as well. I'm James, this is Money to G. Cheers for watching, and I'll see you in the next one.